A warm welcome to you all and welcome to the Maiden edition of Business Link. This is a platform that will give you the best from the world of business. I am Esther Aidoo. Global cocoa market volatility is weighing heavily on the world's largest chocolate manufacturer as Barry Callebaut cuts its profit outlook amid falling prices, industry overcapacity, and supply risk linked to tensions around the Strait of Hormuz. Cocoa prices fell 0.72% last week, reaching over $3,500 per ton. Cocoa prices have slumped 41.6% since the start of the year. A financial analyst based in the UK, Kojo Kusi, is with us via Zoom to discuss the effects of the dip in cocoa prices on the Ghanaian economy. Good afternoon, Kojo.
Esther, thanks for having me on your program, Maiden Edition.
It's been a while. What factors led Barry Callebaut to downgrade its operating profit outlook so sharply within just 3 months?
Okay, so but we're looking at a time frame from when COVID happened and also during the Russian-Ukraine war. These two external factors more or less hindered the shipment of cocoa beans across the world. So what then happened was that there was a higher demand for cocoa beans, and within West Africa, that helped us to accumulate more revenue. But over time, with a higher demand and then for cocoa beans, also led to more or less more supply from our side. We had very, very good harvest over a period between 2002 to 2004. So we produced a lot of cocoa beans. So within the financial markets, the prices of cocoa beans really shot up. And most producers purchased cocoa, or what they did was a forward contract. So they bought cocoa beans at a very, very high price. And with the oversupply, definitely, cocoa or the financial markets work on the forces of demand and supply. So when there was abundant supply in the market, invariably the prices of cocoa fell. Cocoa beans fell. So here it is that cocoa chocolate or chocolate manufacturer has contracts to purchase cocoa at a very high price. However, cocoa prices are now falling. So they've had to, buy cocoa at a very high price and then also sell cocoa at a very low price. And that has sort of impacted on their profit margin. So they had to downgrade their forecast to take into effect the reality on the ground. Thank you.
And to what extent really is industry overcapacity affecting demand and pricing power in the global chocolate market?
Right. At the moment, there's a record bean surplus from West African countries. Okay. And with this combined competitive overcapacity, it has forced Barry, Callebaut, and other companies like Mars and the rest to, they have so much by way of um, surplus cocoa beans. But the consumers, as we all know, currently there's a lot of, what we call economic upheaval going around. Inflation is going up, and a lot of people are thinking of, or they see chocolate to be a luxury and they want other substitutes. So people are cutting down on purchases of cocoa and other chocolate and other luxury goods. So with that in mind, producers of chocolate are thinking of, okay, let's reduce the price. And whilst they reduce the price, it affects their margin. So that is one of the key issues. And with a company like Barry Callebaut, there's also a supply disruption in North America. Specifically, they've cited a temporary factory closure in Canada. And this is also having an impact. And having bought cocoa beans at a very high price, the cost of financing these cocoa beans were also very high. And with the low margins now, they've had to, cut one or two things. And sometimes you might even be looking at what do you call it? Laying off some workers just to stay afloat. So these factors have accounted for the situation they are currently in as a whole, as a company and the industry. Thank you.
And how significant are geopolitical risks, particularly tensions affecting the Strait of Hormuz on cocoa supply chains and production costs?
Okay, what we've got to be mindful of is, I'll take our viewers' minds back to when when the Russian-Ukraine war started. I believe that we in Ghana, we thought that it doesn't affect us, but what we have to be very mindful of is that things like fertilizer, are derivative components of crude oil. So where there is an issue of, say, the Strait of Hormuz, where people are not able to, ships are not able to, um, shippers are not able to ship goods, it affects not only oil, but then things like also fertilizer. So with an increment in fuel costs, energy costs, and also factors of production, all these tend to impact. So it's not just America, the world as a whole, with 20% of oil flows going through the Strait of Hormuz, there's definitely going to be an impact, and that is affecting the cocoa industry as it is.
Into Ghana, what are the effects on cocoa revenue and farmer incomes?
Right. So here in Ghana, as we all know, cocoa contributes about 15% to our export revenue. So with a decrease in cocoa beans, the price of cocoa beans worldwide, the impact is that government revenue is going to fall. And we saw bits of it early this year where the finance minister had to announce new producer prices for cocoa, and there were bits of demonstrations here and there. That affects the livelihood of farmers. And then also, as we know, Cocoa Board has had to reduce the staff benefits that they have. So all these are impacting. And Cocoa Board, believe you me, also bought cocoa on a higher price. And at the moment, they've had to, the revenue that is going to accrue to them from the world market is also going to be low. So they are also facing financing pressures, and they have to be able to find a way to stay afloat. So all these are impacting Ghana as things stand.
And finally, do you expect the price decline to affect government policy and also value addition?
Right. So the government has done something really good. They've kept to their campaign promise of 24-hour economy. I know that they've not fulfilled everything. They are working. They've set up an authority, and that is a good start. And then also they've come up with a big push initiative to help. And the way things are, places like Ashanti, Central Region, the big push of construction of roads is really going to help for the carting of cocoa beans from the interior areas to places like Tema. And then the good news is also that the government has a policy of processing more cocoa beans in Ghana, and that is actually going to help us to have more value. And what many of us don't realize is that there are so many other products besides chocolate that we can derive from cocoa. So if we are able to process cocoa in Ghana or cocoa beans in Ghana, it will go a really long way to create nascent industries for Ghana's economy to thrive. Thank you.
Well, thank you so much, Kojo, and we hope to be hearing from you often on this platform.
Thank you for having me. I hope to
Welcome.
be able to. Thank you.
That was Kojo Kusi. He was speaking to us on the sharp decline in cocoa prices. To other stories, passenger arrivals at Kotoka International Airport have recorded a steady increase on a year-on-year basis, signaling a recovery in international travel. However, recent figures show a decline compared to the previous month. Meanwhile, Ghana's major ports are witnessing significant growth in container traffic. According to the Bank of Ghana, in its March 2026 monetary policy report, passenger arrivals at Kotoka International Airport rose by 8.7% year-on-year, reaching 110,087 in January 2026. This marks an increase from the 101,237 passengers recorded during the same period in 2025, indicating improved international travel activity and economic engagement. However, on a month-on-month basis, basis, the data tells a different story. Passenger arrivals through the airport and land borders declined by 18.9% compared to figures recorded in December 2025, suggesting a possible seasonal slowdown or reduced travel demand after the festive period. In contrast, Ghana's maritime sector recorded notable growth at the country's two main harbors, Tema Port and Takoradi Port. The total container traffic increased by 13.6% year-on-year. The figures show that container throughput rose by 74,508 in January 2026, up from 65,594 during the same period last year, reflecting improved trade activity and port efficiency. Despite this annual growth, month-on-month performance declined by 9.8% from the 82,624 containers recorded in December 2025. That was a story on passenger arrivals declining at the Accra International Airport. And we have via Zoom the managing editor of Aviation Ghana, Dr. Dominic Ando, to speak to us on this. Good afternoon, Doc.
Hi, good afternoon, Esther.
Now, can we attribute the decline to a dip in passenger arrival often experienced after holiday seasons?
Exactly, that's the case. Well, in aviation, we look at the peak seasons. The peak seasons generally, the Easter period for about 3-4 weeks, 5 weeks. And then we have the summer season, which start from June all the way to September ending. And then we have the lean season between October and November, where airlines struggle to fill seats. And then we have the peak season, January all the way to first week January, December all the way to first week January. In January, all those who came for festivities in December and GH, that's December, as you like to call it, are all leaving. So arrivals in January is actually very limited. So month on month, if it dips in January as compared to December, it's to be expected because the festive season is in December, and that's when they came to have fun. In January, they are going back. But fortunately, the report also said year on year it's gone up by 8.something%, which is good. It means that if you take the whole number of arrivals, passenger arrivals, compared to the previous year, we've actually gone up by 8.something%, which is good.
Are visa policies contributing to the reduced arrivals? Dominic, before you answer, we are having some feedback from your end. Can you check your machine for us?
Okay.
So you can go on, please.
I can hear you now.
Whether visa policies...
In terms of the reduced arrivals in January, that one was to be expected because January comes just after the festive season, the peak season, which is December. So in terms of the dip in January, that was to be expected. However, the year-on-year passenger group rate, we can attribute some of our visa policies to it. We've seen that Ghana has rolled out some visa-free with some countries. For instance, South Africa Airways, South Africa as a country. 2 years ago when we started, we've seen that the volumes have gone up. A lot of South Africans are coming to Ghana for the festive season because they don't have to go through the hassle of applying for visas, etc. And we also do the same, going to South Africa. Other countries where we have the same arrangement with, especially those in the Caribbean, on the back of Year of Return and December and GH, they are also coming to Ghana a lot. The December and GH has survived based on the empirical studies that have been conducted, has survived on the back of the various activities, musical and concert activities that we've had since 2019. So that has kept the momentum going. So visa policies and the various activities implemented by government through the GTA and Ghana Tourism Development Company have all contributed to the increase in the number of passengers coming to the country.
And will the rising cost of aviation fuel and the increase in ticketing prices also influence passenger arrivals going forward?
In fact, we expect that the increase in aviation fuel and newly introduced taxes will be able to see the full impact of it by the end of the summer season, which is by September. We should be able to know. It gives us about a 6 months window to be able to tell whether it has really impacted us or not. However, currently, for the past weekend, the one before, we've seen that airlines have increased the fuel surcharges. The fuel surcharges component of the ticket, airline ticket, has gone up a bit. It's because fuel makes up 40% of airline costs. If the fuel price goes up by 1 cedi, the airline is going to surcharge you, the passenger, to recover that cost. So if you bought a ticket in January or February, compare the fuel surcharge to what you just bought. If you bought a ticket after April 1st, if you compare the fuel surcharge, you realize that the fuel surcharge component of the taxes you pay on airline tickets have gone up a bit. So yes, it has impacted the airline fares because the fuel surcharge component has gone up, and the newly introduced tax has also gone up, increased it a bit by $100 if you are flying intercontinental routes. If you are flying regional routes, it's gone up by about $30 per trip, and if this ECOWAS trip, it's gone up by $15 per trip.
Talking about the, excuse me, talking about the ticketing, is there no way to mitigate its effect on the consumer?
Fortunately, last weekend, we also heard that the Strait of Hormuz was opened for free flow of vessels. As soon as that announcement was made, if you look at the international market, the price of aviation fuel generally fell for a brief period. So if that continues, if the strait is open and there's supply onto the market, we expect that the price of aviation fuel will also come down or respond accordingly. But if the strait is closed again, it means that there's demand shortfall. Airlines want more fuel to fly, but the supply will not be there, which will automatically lead to a surge in fuel charges. Essentially, there's only 2 tankers available. There are 100 people fighting for the 2 tankers. Prices will go up. And the airlines will not absorb those costs. They will pass it on to consumers.
So how does the decline in arrivals impact the tourism industry? Talking of revenue.
In terms of the decline that the BOG report indicated in January, that one hasn't affected us at all. I say it hasn't affected us at all because I go by the year-on-year figures. The year-on-year figure shows an increase generally over a 1-year period of 8.7% or so. As for the month-on-month, December is a peak season. So December, you expect more people to come in. In January, the workers are all leaving. So you don't expect a lot of people coming in. So the decline in January wouldn't really affect us. We would rather see the total throughput of what you just talked about. By the end of September, which is by the end of this current summer season, we can compare September's figures to that of last year and say based on the fuel surcharges, based on the newly introduced taxes, passenger throughput has declined. So by the end of September, we'll be able to say that. But as for comparing January this year to December last year, the dip is to be expected. But by September ending, we can have a conversation and compare the figures in September to that of last year, September, and make a definite conclusion on this matter.
Thank you so much, Dr. Dominic Ando, for your time. And Dr. Dominic Ando, the managing editor of Aviation Ghana, was speaking to us on passenger arrivals declining at the Accra Airport. And moving on, Accra has become the center of Africa's real estate conversation as more than 1,500 delegates and diaspora investors gathered for the maiden edition of the Africa Real Estate Festival 2026. The festival comes at a critical time. Ghana and much of Africa are grappling with severe housing deficits and mounting urbanization pressures, underscoring the need for stronger public-private collaboration across the continent.
The African Development Bank estimates Africa faces a shortage of over 51 million housing units, requiring more than $1.4 trillion annually to close the gap. With Africa's urban population set to double by 2050, sustainable housing has become one of the continent's most urgent development priorities. In Ghana, industry data puts the housing deficit at more than 1.8 million units, driven by population growth and rural-urban migration. Over 58% of Ghanaians now live in urban areas, intensifying pressure on housing and infrastructure in cities like Accra and Kumasi. The private sector currently delivers nearly 90% of Ghana's housing, making government developer partnerships essential to addressing the challenge. Minister for Works, Housing and Water Resources, Kenneth Gilbert Ejay, said Africa's housing agenda must prioritize affordability and resilience.
Innovation must reduce construction costs and accelerate housing delivery. However, speed and affordability must not compromise quality. Our developments must respond to climate realities, reflect our cultural identity, and support inclusive and thriving communities.
Founder and Chief Executive of the Africa Real Estate Festival 2026, Desmond Kwesi Oting, described the event as a turning point in how Africa shapes its own investment narrative.
RF is deliberately correcting that reality today. We are convening the Africa real estate conversation on an African soil, in African voices, with African capital in the room and African solutions on the table. And we are doing this right from Ghana.
The Real Estate Agency Council called for greater discipline and professionalism in the sector. The festival also spotlighted the role of the Rent Control Department, emphasizing that fairness between landlords and tenants remains critical to a stable housing market.
Let's see how the CD and Commodities Board fared. And that's all for the maiden edition of Business Link. It will be coming your way Mondays, Wednesdays, and Fridays at 1. Thanks for watching.